Ladies and gentlemen, good day and welcome to the Standard Engineering Technology Limited Q4 FY26 earnings conference call. As a reminder, all participant lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. I now hand the conference call over to Ms. Priyashi Patel from Go India Advisors. Thank you, and over to you.
Thank you, Steve. Good evening, everyone, and welcome to Quarter 4 and FY26 earning call of Standard Engineering Technology Limited. We have on the call Mr. Nageshwarar Kandala, Managing Director, Mr. Ramakrishna Kandala, Executive Director, Mr. Venkate Mohana Rao Katargada, Executive Director, Mr. Yasu Yuki Ekeda, Executive Director, and Mr. Anjaneyulu Pathuri, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risk that the company faces. I will now request Mr. Nageshwar sir to please take us through the financial and the business update, subsequent to which we will open the floor for the question and answer. Thank you, and over to you, sir.
Good evening, everyone. Thank you for joining us today on the Q4 and full year 25-26 earnings call. I warm welcome to all our shareholders, investors, analysts, bank partners, global partners, and member of the SETL family. I want to begin by saying this plainly. This has been the best year in our company's history. The numbers will speak for themselves. But I want to convey is that it is not just a scale of performance that stood out. It was the depth of it. Revenue, profitability, cash flows, working capital, execution quality, all of them improved together in the same year. That does not happen by accident. And I am deeply proud of what our team has built. Over the past 3 quarters, I have spoken at length about our evaluation from a glass-lined equipment manufacturer into a fully integrated precision engineering and turnkey solution company. The transformation is now complete and execution, not just in a intent. Glass-lining remains a core strength and one of our most profitable verticals, but today Standard Engineering Technology Limited delivers complex multidisciplinary projects with single point accountability. From concept, process engineering, and detailed design to fabrication, automation, installation, commissioning, water trials, and validation. Very few companies globally offer this depth under one roof for pharmaceutical, chemical, food and beverages, and biotechnology industries. The acquisition of Hygienic and Standard P2C Engineering, announced and completed it during the year, and integration completely done, have made this capability real and operational. CTC brings process, civil, HVAC, electrical, and instrumentation engineering fully in-house. Hygienic strengthen our position in bioprocess and fermentation systems. Together, they make our integrated platform one of the most complete in the industry. As I said at the outset, this was the strongest financial year in company history. And what makes particularly meaningful is that the improvement was broad-based. Revenues grow strongly year on year. Profit will grow alongside revenues, not at the expense of investment. Operating cash flows improved substantially, and our working capital cycle tightened, a discipline that is genuinely difficult to maintain while simultaneously expanding operations at the pace we have. Taken together, these results reflect a business that is growing in a healthy and sustainable way. Total income stood 793 crores and 26.7% year-on-year growth. EBITDA 138 crores, 15.2% year-on-year growth. with an EBITDA margin 17.4%. Profit before tax PBT 111 crores, up by 18.9% year-on-year growth. Profit after tax PAT 83 crores, 21% year-on-year growth, with PAT margins 10.5%. EPS improved 4 rupees. Working capital days has improved from 174 days to 160 days. Cash flows from operations are positive cash flows 45 crores. Total income to 230 crore Q4 results. Total income to 231 crore, registered of 35% growth. EBIT 36 crores, 26% growth, 15.55% margin. Profit before tax 29 crore, reflecting 28.4% growth. Profit after tax 21 crore, 27.8% growth. Tax margins 9.1%. On margins, Q4 saw some pressure on EBITDA, primarily driven by commodity prices increases in key input raw materials. We are also making deliberate investments on manpower, as we gear up for what we expect to be an even stronger year ahead. These are considered investments, not cost overruns. We are actively working to offset this pressure through operational leverages as our revenue volumes grow. Tighter procurement discipline and ongoing efficiency improvement across manufacturing and project execution. The revenue trajectory we are on itself the most powerful lever for margins recovery. A few technology milestones worth highlighting. Each of a proof point, not just a pipeline item. Our cell and tube glass lining heat exchangers developed with our Japanese partner GLH Hako now have over 200 units in the order book, with 100 already successfully delivered. This is commercial validation at scale. Customers are actively choosing this or graphite and alloy alternatives, not because of price, but because of superior safety, reliability, and life cycle performance. That is the meaningful shift in customer behavior, and it tells us that market is ready for what we are building. Our conductivity glass lining reactors are progressing well. Multiple units have already been manufactured, supplied, and validated into the field. With encouraging feedback from a regulated pharma market, our international partner IPP has expressed strong interest on distributing this globally. We will share more on the formal launch in the quarter ahead, but the early signals are very positive. On our new 36-acre integrated advanced manufacturing campus, construction is progressing on plan. This facility will open the door to oil and gas, nuclear engineering, food and beverages, and heavy precision engineering sectors we are not currently serving at scale. Actively decisions with global partners and several of these areas are already underway. I want to highlight two governance decisions that consider as much strategic as they are structural, and I want to give them the prominence they deserve. The board has approved the re-designation of Mr. Yasuki Ekada, an existing non-executive director, to executive director, subject to shareholders' approval. At the ensuing AGM, this individual has been with our board since earlier 2023 and has been deeply involved in international business development, strategic collaboration, and globally expansion, particularly in Japan and other overseas markets. In the enhanced executive role, they will lead global operations and marketing with a focused mandate on depending on our technology partnerships and expanding our international reach as we accelerate our global ambition. Having this level of dedicated executive focus on exactly what this space of growth demands. The board has also approved the appointment of Mr. Kancharla Umamaheshwarrao, new independent director, subject to shareholders' approval. This individual brings over 38 years experience in precision engineering, industrial manufacturing, and engineering technology with expertise in 3D plant modeling, intelligent schematics, and advanced engineering and analysis, governance, depth we need to at board level. Both appointments are a signal of the kind of institutions we are building. One with the leadership and governance architecture to match our long-term ambition. We enter the new financial year from a position of genuine strength. Our order book pipeline is healthy. Our execution capabilities are expanding, and our platform is now differentiated in ways that matter to customers. Our international business continues to grow, and we see meaningful headroom ahead. A global demand for integrated engineering solutions increase. The structural tailwinds remain firmly on our favor. India's CDMO expansion, supply chain diversification globally, increasing our long-term structural shifts, and we are positioned at the center of them. We are confident and continued strong growth in the year ahead. The investments we are making today in people, in technology, and infrastructure are the right ones. The scale are building to award. To our shareholders and investors, this year results belongs too much to you as they do to us. Your belief in this journey through every phase of our evaluation has been foundation on which everyone else has been built. Thank you. To our customers, employees, banking partners, and global partners, your trust and partnership make this possible. We do not take either lightly. We have come a long way, and the most exciting part of this story is still ahead. And now, I will hand out to Mr. Yasuki Akada, Executive Director, Global Operation, and share his thoughts. Over to Mr. Yasu.
Thank you, Nagesh. Good evening, everyone. My name is Yasuyuki Ikeda. I was elected to Executive Director of SCTL. So I have been closely looking at SCTL as a non-executive director for the last 2 years, and I can confidently say that this company is building something very unique for the future. As Nagesh just explained, that financial year 26 March was very strong. But what is more exciting is that, as Nagesh explained, we have started from equipment manufacturing company. Now we are adding engineering capability, execution capability. So we are becoming a one-stop solution company, which is very unique and I have never seen such a company globally. And this is what we're trying to achieve. So we have I'm very excited about the future growth potential of SCTL. So today we are still evolving from a traditional equipment manufacturing company into a global integrated engineering and technology platform. And very few companies, as I said, I've never seen such a company in the world. So we are trying to become something unique, something new to the market. And not only engineering, but advanced manufacturing and turnkey project execution, automation, installation, commissioning, water trial, validation, and documentation. So we can do this all under one platform in the same company for pharmaceutical and chemical industry. So this integrated capability creates So this integrated capability creates a powerful long-term business model. And I strongly believe that SCTL is strategically positioned for the next phase of growth. So the company is expanding to new sectors, including oil and gas, nuclear engineering, food and beverage, advanced process industries, and high purity engineering systems, and so on. SCTL is also building international partners, as Nagesh mentioned, technology collaboration with companies like GL Hakko, Japan, which will strengthen its global positioning in the coming years. So I am Japanese. So from a Japanese perspective, there are still some areas that SCTL needs to improve. But having this Japanese strength, the quality conscious, conservative, keep the promise with the Indian good culture, this combination is very, not only the Indian customers can benefit from our collaboration, but we would like to tackle global market in the future. Of course, we will do it step by step, but the Japan plus India, now we can implement the same in the other global countries. We can do the same thing. And so I believe that financial year 27 is another major growth for SCTL. So the future roadmap, the global partnership, technology focus, expansion plans, and the integrated engineering platform gives me confidence about the long-term future of SCTL. And I am extremely exciting. This is an extremely exciting time for me as well. And thank you for your trust and continued support. I'm looking forward to building this future journey together. Thank you.
Thank you, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Disha with Sapphire Capital. Please go ahead.
Hello. Hello, audible, sir?
Yes, audible.
Yes, thank you so much for this opportunity. So first question was on our gross margin. So our gross margin has declined from around 39% in Q3 to 32% in Q4. So what was the reason for that?
I explained to you, madam. Thank you for question. And I explained two things. One is metal, slightly metal prices are increased, and the second thing is we invested on people. Coming years we have very big order books. Coming years we have high growth. Then we are invested on people. We recruited many people for the coming years growth perspective.
So how should we look at the?
That is slightly impacted our profitability, and coming quarters it's going to increase our profitability.
So how should we see the EBITDA margins for FY27?
Sorry?
EBITDA margins for 27?
27 is going to improve.
Any sort of numbers, sir, that you like to put?
No, improve, madam. This is further, whatever we given result, this further 27 is going to improve better than 26.
Okay. And what is the current order book position?
Order book, approximately, today we have order in hand, approximately 1,000 crores, above 1,000 crores. We are not giving order book, but order inflow is the pipeline. So currently we have 1,000 crores order book.
Yeah, so how much, out of that, how much will be export?
You are talking about the 26 or 27?
No, so the 1,000 crore order book, what will be the proportion of exports?
Export, I think so 30 crores export is there, that is. Almost domestic. Majority is domestic.
Okay. Yeah, so 30 crores. Okay. And how do you see, sir, the revenue growth? Because we have a good order book, so what sort of growth are you expecting for FY27?
Compared to 26, better. We are going to do better. 27.
So this 25% sort of growth can we maintain?
Better than this year, madam. Damn sure.
Okay. And what was the CapEx number for FY26, sir? And what will be for FY27?
FY26, I think we invested in 30 crores. 40 crores we invested. And coming 27, we are planning to coming 2 years, 130 crores we are going to invest in one facility.
So there was, last time I think we spoke, there was one greenfield factory that was coming up and you said the construction is progressing well. So how much?
That project is 36 acres. That project is started now.
Sorry?
That project is now greenfield project construction started. We are going to complete within 2 years. First phase we are going to complete 27 April 1st. It will 50% will going to come into operations.
Okay, so how much capacity are we adding there?
Total capex investment is 130 crores. This year we are going to invest 65 crores. Next year we are going to another 65 crores we are going to invest on that facility.
Okay, and how much capacity are we adding and what will be the revenue potential from these plants?
Existing facilities also we are improving. Last call I explained to you same thing. And existing facilities we are bringing a lot of robots and automatic welding machines, automatic polishing machines. And so existing facilities become can handle another 60-70% revenue can handle. And that facility totally, if you complete that, almost that facility can handle up to 220 crores revenue.
Up to how much?
Total once existing facilities and a new facility is completely finished, then our manufacturing capability is almost 4,000 crores.
Could you repeat that? I could not hear you.
Sorry?
Could you just repeat the number? What will be the total potential?
Total existing facilities, I explained it clearly. Existing facilities, we are moderate happening and robots and automatic machines, everything we are adding. Once everything we add, existing facility is going to a 2,000 crores capacity. And once the greenfield project is completed, that is another 2,000 crores capacity. Total existing and new facility, total, it will become a 4,000 crores manufacturing capabilities we are going to get.
Okay. That is clear. Thank you so much, sir, and all the best.
Thank you.
Thank you. The next question comes from the line of KV Raman with Sequent Investments. Please go ahead.
Hello, sir. Congratulations on good set of numbers. I think about 2 quarters back, you have given that you would be having the quarterly revenue of 250 to 300 crores. Is it possible that can we expect that 250 to 300 crores of quarterly revenue run rate from FY27 onwards?
Yes, possible. Possible, and definitely we are going to do.
And so what's our current utilization in the existing plant?
Existing plants, almost 70-80% we are using. But once we moderate equipment, we are adding another 30% we can create existing facilities capacity we can create.
Okay, and how much are you spending to modernize this for the upgradation of the existing plant?
Last year we invested another 40 crores. Another 35 to 40 crores we are going to invest.
Oh, okay. And my second question is with respect to C2C engineering.
Yes.
How much revenue did we do in C2C engineering in FY26? And what's the guidance? How are we planning to grow that particular business in the coming year?
This year, actually, we are expecting, this year they finished it with 24 crores. And next year we are targeting 60 crores. Is it possible? 60 crores. That is our capability. The integration and developing small business acquisition and scale up the business. That is our philosophy. So this year I told you 24. This next year 60 crores. Because of order book already we have C2C order book almost 46, 47 crores at the moment, and 60 crores.
Understood, sir. And so what about your Science Genic acquisition you did in Q2? How has that panned out in FY27, and what's the growth guidance for that in the coming year as well?
FY26 Scientific did I think 20 crores something we did this year. Only because of last quarter only we that full but of the total I think this year also we are going to touch 60 crores. That is also Scientific also we are going to touch.
So if my understanding is right, sir, from C2C as well as the Science Genic, you will be having incremental 100 crores of sales.
Yes, 100% increment. Yes, correct. You are right.
And so what about the margins in this C2C engineering and Science Genic? Are they similar margin to the company's overall margin or a better margin business?
Similar margins.
Okay, similar margin. So I just have one doubt, sir. As you already mentioned that we are at 80% utilization and our utilization will further improve. Can we expect the margins to improve from the current 14% margin to around 16-17% margin in FY27?
Margins going to improve, definitely. Figure I can't confirm, but margins going to improve and the revenue is going to better than 26. Improvement. Growth.
So can you explain? Yeah. Okay. Just a follow-up on this. Can you just explain where will the margin improvement come from, like operating leverage or exports, etc., something like that?
We actually this year we invested on people. Very big number of employees we recruited for the future growth point of view. And already order book is very strong and customer response also very strong. And how we are going to margins improve? We are going to provide solutions. We are selling solutions. We are product based, always comparisons, always competition. But whenever we are going to provide to customer solutions, our margins are going to improve. That is, we believe. Last year also, some cases we saw, same we are going to implement in coming years.
Understood, sir. Thank you so much, sir.
Thank you. The next question comes from the line of Prakhar Debriwal with Choice Institutional Equities. Please go ahead.
Yeah. Hello, sir. Congratulations on a great set of numbers.
Thank you, sir.
I'm relatively new to this industry, and I just wanted to understand your order book is of 1,000 crores. So are we seeing a CapEx?
Sir, your voice is not clear, sir.
Hello.
Yes.
Yes, sir. So I just wanted to understand your current 1,000 crore order book. So is it mostly now driven by the CapEx renewal we are seeing in India, or are you also capturing market share from the larger competitors?
I can't comment that competitor point of view. We got orders from my clients.
Okay. And what about export plans, sir?
Export plans are good and good orders in pipeline. We are discussing with clients, and due to some discussions is slightly delay. But compared to last year, this year, the FY26, our revenue is doubled, export revenue.
Okay.
So we are expecting 27 also this is going to grow.
Okay. Okay. Any specific countries or regions, sir, where you are focusing more?
No, we are focusing globe, sir. We are equally Europe and US and Middle East. We are getting good opportunities.
Okay. 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 Great, sir. Thank you so much.
Thank you. Thank you. Thank you.
Thank you. The next question comes from the line of Jatin from Avikshit Financial Advisory. Please go ahead.
Hello, am I audible?
Yes.
Sir, in Q3 Concall, you have said that $3.5 million of export is going to disperse in quarter four. But when we see on quarter four number, our current export is just 5.3% against the guidance which we have given about 12 to 13%. So why the reason of this slippage, if you can explain?
The reason is some equipment is almost ready, but client is asking to wait. This quarter, we are going to clear this first quarter. That whatever pending order is there.
Okay.
But
My next question.
However, exports is exciting compared to FY25, FY26. Our revenue, export revenue is doubled. So same we are expecting in FY27 also.
So that remaining $3.5 million order which we have get, so like this revenue will come in next quarter or it will delay further?
No, this first quarter we are going to max we are going to complete. And based on customer, we are waiting for some customer clearances also.
Okay, thank you. And my next question is like in previous con call, you have told like export and that solution and engineering have a premium margin compared to standalone equipment. As we can see, like from FY25 to FY26, we have grown our export as well as engineering revenue has increased. But when we see on margin, that margin has been down. If you can explain this further.
Margin is not slightly down because of the two things I told you. One is the metal prices are increased. That is slightly impacted. And the second thing is we are recruited many employees for future growth point of view. That purpose slightly manpower is investment is happened. That is slightly margins are reduced. And FY27 it is going to pick up. Margins also going to increase. Margin going to.
Okay. And on inventory side, our inventory has been double when we compare from FY25 to 26. Any reason on that?
Double. Because of
close to.
Export and our projects, we are integrating a lot of metals we need to procure and integrate and we will dispatch. It's not only manufacturing, many things we need to. That's the reason our integration and also we are providing project solutions. So this lot of inventory is required. This will reduce the lead time and delivery time.
Okay. But when we see in presentation on page number 26, we can see like our inventory days has not been double or increased. Like it has been decreased. So you can tell like how you are calculating those inventory days.
That what is on the CFO? My CFO will give answer that.
So generally what we do is, because since we have received an advance from the customer for the inventory, we reduce the advance received from customer from the inventory value. And then we will arrange the inventory days.
Okay. Okay, thank you.
Thank you. The next question comes from the line of Rohit Ori, Progressive Shares. Please go ahead.
Hi team, couple of questions. First one, sir, you mentioned about this order book. Can you take us through that? If you can break up this order book into the revenue mix, can you do that?
Break up mix?
The order book, if you can break up into glass line versus heavy engineering and the other segments.
No, we don't have that. We can't disclose that breakup.
Okay. Okay. In terms of this order book, we are winning these orders because of quality or speed or pricing.
We are working with our Japanese partners, a lot of quality and uniqueness also. Whatever we are company, our company is a complete unique company. We are end-to-end solution provider. We are selling solutions. We are not independent equipment sellers.
Okay. So we did mention about the advance that is taken by the customers, that is paid by the customers. What percentage is that? If you can share that, how much advance do we take from the customers?
Generally, we will accept 20%, 30%. Sometimes customers will PO along with 10%. Based on customer discussion, we will take advance.
Sir, we see this development which is happening with standard projects. You intend to enter infra and EPC. I understand that you are giving solutions, but then in terms of the design capability, fabrication and commission, so do you think while going up the value chain, our margins could get depressed?
No, sir. We are not going to a construction company. We are not going to do any EPC jobs also. EPC means engineering and procurement and construction. But we are different, unique company. We build the unique. We are anyhow equipment we are manufacturing and we are supplying execution, water tank, designing and concept to completion. And sometimes customers are asking, we generally we will avoid the civil part to client. We can't do but clients are insisting you can do this also. Then we don't want to do conventional constructions. That is will be take a lot of time and manpower involvement. Sometimes today you can see last 1 quarter people are not available due to election, summer, lot of things. That we don't want to affect our business. Then we are planning to. We have capability to precast. We can build through precast very quickly, fast. Building production blocks will complete within 6 months. That capabilities we have, high engineering capabilities we have. So we started precast only. We do any greenfield project for coming days. Any client wants, we can complete within 12 to 14 months. That is our capability. Now we made a full platform for the pharma and chemical companies.
So, sir, despite this small shift, which is more towards the metal equipments that you might do, you are still hopeful that your margins will be in the range of maybe 17% or 20% kind of a range?
No, we are not. Equipment point of view, always margins are very tight, but we are always, we provide the complete solution to clients. That advantage we are getting. Future also it is going to improve.
Okay. So we see this healthy growth which is there, but when we look at the balance sheet comes under a little bit of stress. Understand there is expansion which is taking place at your end, and you are.
Can you elaborate what is the stress you understand? I can explain.
Sir, in the inventories, CFO sir said, but in terms of the balance sheet, if you see the receivables, they are also increasing, which gives you a little bit of a shift in the ROC also. So that was the question, that by when do you think that the cash conversion will become better from here on also? And
for 27, this is going to cash conversion is going to be better compared to FY26. 27 is going to be better already. Compared to 25, 26, a lot of improvement is happening. That is 5 crores operations positive cash flow become a 45, and working capital days also become a 180, become a 160. 160. So next coming year, anyhow our working capital days we require really 170 because our business model is like that. And collection point of view are improving, and margins point of view we are improving. This year also slightly we recruited many higher end employees and we invested on manpower. So that is the reason slightly this year compared to 26 financial year, 27 we are going to grow very high. So that manpower cost also we are going to cover coming years. So our profitability also is going to increase.
So with the growth that we have, do you think that in next 2 years or so that we will have good quality of free cash flow generation also?
Yes, 100%. That is our target also.
Okay.
So
My last question.
I would request you to please come back in the queue for further questions as there are others waiting in the line. Thank you. The next question comes from the line of Arvind Arora from A Square Capital. Please go ahead.
Hello. Am I audible?
Yes.
Yeah. So, sir, what is the execution timeline for our current order book?
I think this is almost 8 months, I think. 8 months, 9 months.
Okay, correct. And, sir, you mentioned in the PPT that we are expecting a TAM of around 108 billion in USD. So,
Sorry?
and this is on export. Hello, am I audible?
Yes, tell me. Your voice is some missing, sir. Some words is missing. Tell me, sir. Now again, say please. Ask me again question.
Yeah. So in the PPT, we have mentioned that our global TAM would be 108 billion in USD. So any discussion or anything in pipeline that we are discussing with the clients and that you feel like that will be converted soon, like?
Yes, the global TAM is there. TAM is available. Even India also 70,000 crores TAM is there. And we are doing nothing. That is our scope is there. If we try, sky is not a limit. That's the reason we are expanding facilities, and also we are not only expanding our existing products also. We are trying to enter new areas also. That is we mentioned in presentation. And global TAM is very big, very big. One company, I don't want to mention here company, one company, German-based company, one product they are producing. That product almost TAM to 10 billion. They are doing 5 billion. We are nothing, we are not doing it. But the scope is there. The future is very bright.
Understood, sir. But scope is there. But is there any discussion or any inquiries that we are getting or anything where we are?
Inquiries we are getting, we are started supplying. That's the reason. 25 versus 26 financial year, our export growth is doubled. Okay. 27 also, we are expecting same and positive response, but bit challenge to accept to Indian ports. Now we are added Japanese technology, Japanese culture, and now our global operations going to control Mr. Yasuki Ekada. That's a further improvement is going to happen in our business, we believe.
Understood. Okay. So, and my second question was regarding the inventory, which is at 438 crore. So, what is the aging of this inventory, sir?
This is cleared in next 9 months.
Next 10 months, yes. Next 10 months, this inventory is going to clear. I think this is all below to 180 days below, I think, this inventory. No damage. No.
Maintaining this.
Sorry.
Yeah, sorry, sir, go ahead.
Inventory is all quality inventory only. That is, I am clearing it to you.
Okay, understood. So it's less than 180 days. That's what you said, correct?
Yes.
And maintaining at a high level inventory, is it like we are expecting good growth in the coming year? That's why you are maintaining at a high level in inventory?
Yes. Next year, this year, compared to this year, next year is very high growth.
Okay, understood. And is it not because of this any supply chain constraints that you are like feeling that could come due to this war and this global scenario? Is there anything like that, sir?
Yes, some challenges already we are facing. Because of today, material cost is X, so tomorrow is X plus 1. That is we are facing. Already, not me and the whole industry is facing. So once order received, immediately we are also booking the raw materials. So daily volatile is very high. Metals, particularly metals.
Understood. Okay, understood, sir. Thank you so much, and all the best. And you and your team is doing great job, sir. Thank you once again.
Thank you.
Thank you. The next question comes from the line of Hemant Soni, an individual investor. Please go ahead.
Sir, thank you for providing me the opportunity. Sir, I have two questions. First question is, sir, you had earlier spoken that we will be manufacturing shell and tube glass-lined heat exchanger from the month of April. So has it come live? First question is this. And sir, because currently I think we are importing it from Japan, right? And sir, the second thing which I wanted to know is, sir, you have briefly mentioned about the greenfield capex, which can generate 2,000 crores of revenue with 130 crore capex. So when does it come live, sir?
No, first question, your heat exchanger question is, we have started manufacturing, not complete. Partially, I explained earlier also, partially we started manufacturing. That Indian manufacturing heat exchangers we sold in the market already 50 numbers. And
so
this year, last April onwards, but full-fledged manufacturing we are going to start on July 1st onwards. Full-fledged. Okay?
I'm sorry to interrupt. Hemant, there is some disturbance from your end.
Just a second. Is it better now?
Yes.
Yeah.
Tell me, sir. Can you come again, sir?
First question, my answer. Already, we manufacture in India. April onwards, we 50 numbers and we sold also. That is waiting for customer feedback. And we are manufacturing means we are earlier also my calls I clearly told 80% equipment going to manufacturing in Japan, 20% only we are manufacturing in India. That process we started April, we completed 50 and supplied to clients. And another 50 numbers in order and hand, we are going to, coming days, we are going to execute that also. But our heat exchanger unit is completely coming to operation July 1st onwards. That is heat exchanger position. Secondly, greenfield project, we are coming 2 years, we are going to invest 130 crores. That capacity we are creating 2,000 crores, production capacity capabilities we are creating.
Sir, when does it come live?
It is coming 2 years. I told you, 2 years. First phase 50% will come to operation 1st April 27 onwards. And second April 28, April 1st onwards. Second phase. We are building that facility 2 phases.
Okay, sir. So first phase comes live by April 2027 and the second phase comes live by April 2028, right?
Yes.
And sir, from July, how many number of pieces we are going to manufacture for glass-lined heat exchangers?
We are creating facility, we are creating 200 numbers. Based on order,
200.
Capacity we are creating capacity.
200?
Yes.
And sir, what kind of per month? And sir, what kind of revenue potential does it have, sir? Incremental revenue?
We will see customer response and order book, then we will see. Once first 1 year, 2 years if you run, we will understand that growth and that requirements to customers. But
okay, sir.
TAM is there. TAM, total addressable market, 2,000 crores. Globally, 2 billion is available. We are only one manufacturer in India, this product.
TAM in India is, sir, how much?
2,000 crores.
2,000 crores.
Yes.
Okay, sir.
Thank you.
Thanks a lot.
Thank you. Ladies and gentlemen, you are requested to limit your questions to one per participant. Thank you. Next question comes from the line of Abhijit, an individual investor. Please go ahead.
Hi. Thanks for the opportunity. I'd like to ask a question about the new subsidiary that has been floated. It says that you're getting into pre-engineering buildings. Is this correct?
No, sir. Pre-engineering, not pre-cast buildings, sir. Pre-cast buildings.
Is there any specific reason why you're venturing out into this industry?
No, not industry, sir. What we are doing, sir. Our business is turnkey projects. Sometimes the clients we are asking to do, we are not interested to do civil constructions, but sometimes some clients are asking to do complete. We don't want to touch civil also. Then civil conventional, we are not interested. We have capability precast. We can do pre-engineering for the building, our pipelines, react, how to travel, everything we can do engineering. That capability is there. Then we can easily precast we can produce. Block will be complete within 6 months. Our project speed going to increase. If we enter this area, our project going to increase the speed, execution speed. That is our intention.
Okay. Another question that I have is with regards to the inventory and also the order book. I understand the inventory is 430 crores and the order book is 1,000 crores.
Yes.
Is it correct that you are able to exhaust this order book within the 8 months of the next financial year, or it will take longer?
No. 8 months, 8 to 9 months, 10 months maximum.
Okay. And what is the impact of the war in general to the business? Because we understand that the freight has become an issue, and also steel costs are, as you told, is also another issue.
Metal price is increasing, and freight anyhow, or export freight, always we keep it in customer scope.
Your furnace is dependent on gas, or it's not?
No, sir. We are not using any gas.
Okay. All right. Thank you.
Sir,
best of luck.
One more important point, please understanding. Our glass welding business still 30% next year. Maybe our revenue is going to too much growth. So glass lining is not our business. We are still focusing glass lining, and we are become slowly number one in the glass lining area. But our other areas are very high. Other products are very high. Our basket is.
Okay. Best of luck. Thank you so much.
Thank you.
Thank you. The next question comes from the line of Wing Commander, DVM Teja from IAF. Please go ahead.
So thank you for giving the opportunity. Congratulations to Standard Engineering Technology Limited on their good set of numbers. My question is, in the presentation it is mentioned the strategic priorities to enter into additional end user industries like oil and gas and flavors and fragrance. Are there any future plans to enter into the nuclear reactors or any kind of segment into aerospace and defense?
Nuclear sector we are going to enter.
I'm sorry, sir, we couldn't hear you. Could you please repeat?
My question is...
Yes, sir. I understand your question, sir. We clearly mentioned in our presentation, nuclear also we are entering. That's the reason we are greenfield project, we have started the constructions. Oil and gas and nuclear we are targeting.
Okay. That's great, sir. Can we be expecting by FY28?
Yes, 28, yes.
Thank you, sir.
Thank you. The next question is a follow-up question. It's from the line of Prakash Debriwal from Choice Institutional Equities. Please go ahead.
Yeah. Hi, sir. Again, I had a question on the order book. So just to get an idea on which segment will we expect to grow the fastest, I would like to get what the order book looks like for now.
All segments are growing, sir.
So there must be one, like, for example, our solutions is moving faster, right? It's gotten a larger share of our revenue.
Your voice is not audible, sir.
Hello?
Yes, tell me, sir.
Yeah, so our complete solutions segment is now looking more lucrative. It's gaining a larger share in the revenue. So would that be the growth engine? So just to get an idea on what segment should we focus on.
All segments are growing equally, sir.
Okay. Thanks.
Thank you. The next question comes from the line of KV Raman with Sequent Investments. Please go ahead.
Yes, sir. I just had a follow-up question on the subsidy which we floated, wherein we will be doing precast buildings. I just want to understand why are we planning to get into this particular business, the business?
Same question I answered 3 times, sir. Again, I will answer to you. The pharma companies required blocks. Generally, last 3 years we are saying we are not interested to do any civil work. Customer scope we are leaving, but customers sometimes they are saying everything you should do. So we are not interested construction business and construct the blocks, walls, buildings. But precast we have capability. Precast if you do, customer also going to get benefit because of not required any coloring walls, not required any plastings or anything. So precast buildings we are offering client. So what is the advantage? This project is going to complete within 12 to 14 months. Our speed is going to increase. Sometimes what happens, our equipment is everything is ready, but building is not ready. Building is not in our scope. So project is delayed. Our dispatches are delayed. So customer is saying wait, building is not ready. Project, but customer also losing money because of overrun the project. Suppose 150 crores project delayed 6 months means finance cost, production delays, something. But that gaps we understand in industry. Now we have started precast buildings, so the project speed is going to increase and our delivery is also going to faster. That's the reason we decided to enter precast buildings. Buildings for pharma and chemical companies. We are not going to outside. We are not going to do any domestic buildings. We are going to do with pharma and chemical production blocks for precast buildings. Okay?
Okay, understood, sir. Understood.
Thank you. The next question comes from Rohit Ori with Progressive Shares. Please go ahead.
Hi, sir. Yasu-san is there with us. Sir, if you can just share that what are the key responsibilities which are assigned to him, and going forward, how will we probably improve the strategy or the performance of the company, or maybe the risk or financial integrity, if Yasu can answer that. Thank you, sir.
Yasu can answer, please. Yasu, please answer.
Yeah. Okay. Thank you. So I was assigned to lead the global operations and marketing. And of course, the strategy-wise, I have last 20 years I'm leading AGI Group company. This is a 76-year-old company in Japan, more than 1,000 employees globally. And I have done many acquisitions in last 10, 20 years. So having this experience and understanding the CTO, what we can do at the CTO and what is missing, I will share my experience with the management team, and we will build a global strategy, how we can tackle other market outside of India together with the existing management team. And did I answer your question? What was?
Yes, sir. If you can just take us through that, are we looking at some acquisition or merger of that kind? Because you seem to be specializing in M&A.
Yes, but of course, I cannot say it now. But if that is part of our growth strategy. But just acquiring company is just adding number, and this is not what we should focus. So the organic growth, the combination of organic growth and the inorganic growth is necessary for our sustainable growth. So we're not just looking at 1 or 2 year growth, but we are looking at the sustainable continuous growth. So yes, we will. The answer is yes, we will be acquiring some companies in the future.
Okay, yes, sir. Thank you for answering my question. Arigatou gozaimasu.
Arigatou gozaimasu. Thank you.
Thank you. There are no further questions from the participants. I would now like to hand the conference over to the management for closing comments.
Thank you for attending all. And the future is very bright compared to 26 and 27. We are going to do more growth and profitability going to increase and the quality of business going to increase. And our product range we are adding second side, and we are adding new clients, new geographies. And 27 is the one more exciting year we are expecting, and we are expanding our facilities. Thank you all.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.